Okay, so we would have been on number 4. So I'm going to do it like we don't already have net income calculated. That way it'll be like you do on your homework. So it gives us the revenues and expenses for Paradise Travel Service for the year ended May 31st. It says we invested an additional $40,000 in the business in exchange for common stock, and $10,000 of dividends were paid during the year. Retained earnings as of June 1st, 2017 were $300,000. So when it gives us that, that means that was our beginning retained earnings at the very beginning of the year. Now we're at the end of the year. So this year runs June 1st of 2017 through May 31st of 2018. So we want to do a statement, a retained earnings statement. So on our retained earnings statement, well, again, with our statements, we always start with like the company name, and then on the second line, it's the statement type. So we have Paradise Travel Service, retained earnings statement. This next line is the same for both the income statement and retained earnings. We do for the whatever's ending. In this case, it's the year. So type for the year ended. For the year ended May 31st, 2018. Okay. Who remembers, while we're looking at this, what accounts go into retained earnings? What do I put in there?
Fees earned.
Good.
And your your dividends.
Dividends, good. See others. Do it. Change in retained earnings will go on here. Good. But how do we calculate that? So we know revenues or fees earned are part of it. And dividends. What's the other account type that is part of retained earnings?
Liabilities.
Not liabilities. Net income will be part of it. How do we calculate net income? There you go. Expenses. So yeah, it's net income, and we know net income is what?
Profit, money.
Good. Yeah.
Income.
So that's what retained earnings is, just as a kind of a review. Retained earnings, in a very simplified formula, is net income minus dividends. So, and then net income is revenues minus expenses. So retained earnings is made up of 3 accounts. And as we saw, it could have a beginning balance too. So retained earnings is net income minus dividends, or in other words, revenues minus expenses minus dividends. That's everything that goes into retained earnings. Okay. So when we do our retained earnings statement, we want to calculate our ending retained earnings. How much of all the earnings we've made throughout the whole life of this company are we retaining or keeping? So we always start with the beginning balance. And they gave us that amount. I can find it. So they told us in our instructions that our retained earnings as of June 1st, 2017 was $300,000. So beginning retained earnings is always what goes on the first line. So we'd say retained earnings June 1st, 2017. And they gave us that amount at $300,000. If we were a brand new, not $3 million. If we were a brand new company just getting started, we would have 0 beginning retained earnings. This is the carryover from last year, year before, all of that. So that's the balance that we start with. Then we just need to do this. Okay. Well, the first thing we do is we put in the net income on line 2. Net income. And we have to calculate that in this case because they didn't tell us what our net income was. So on my instructions, I know it's revenues minus expenses. So I would take my revenue of $900,000 minus $300,000 minus $15,000 minus $450,000. So I'm calculating that net income. Okay. And when you do that, it should be 135,000. So net income is 135,000. Well, then I know my next step is to subtract out my dividends. So I subtract out my dividends, and you probably noticed too on your homework, it wants you to put it in as a minus. So it's coming out, it's being subtracted. They told us my dividends were 10,000. So I put a minus 10,000. So net income minus dividends. Well, net income minus dividends is my change in retained earnings for this period. So that's why on the next line we call it change in retained earnings. So for this year, we had a net income, revenues minus expenses, of 135,000. We subtract out our dividends to get, we're adding in more retained earnings, 125,000. Okay, so that's what that means there. So now we're taking beginning retained earnings plus the change in retained earnings gives us our ending retained earnings. Okay. So the retained earnings statement, you always start with beginning retained earnings. Then you calculate in just this year alone, how much are we keeping or adding to that? So net income minus dividends gives us our change in retained earnings for this year. So now our ending retained earnings is 425,000. Again, if we were doing all these statements together, that's the number that goes on our balance sheet then. Okay. Any questions on that? Okay. So then our last statement, because again, we prepare them in order. Income statement, then retained earnings, then balance sheet. So again, here we have the same numbers, which on your homework, they were different. But they tell us, here's all of our account balances at the end of the year. We paid 10,000 in dividends. Retained earnings at the beginning of the year was 300,000. So that's at the beginning of the year. Again, that number, it's 2017, beginning of the year. We would have to recalculate a new retained earnings to go on the balance sheet. We want our ending retained earnings. That would come from our statement of retained earnings. So they give us all of our accounts. And again, we'll be kind of quick with this because I want to spend time reviewing. But on a balance sheet, notice the header starts out the same. We have our company name and then the statement type, which is balance sheet. The difference is when you prepare a balance sheet, you put today's date, the date it's prepared. Because you're saying as of May 31st, my assets equal my liabilities plus my equity. So this is the only statement we put the date prepared. Then, as you can see, we're going to list all of our assets first. Okay, so I'll go through this kind of quickly just because I wanted to give you an idea. Again, for your homework, but this won't be on the test. I always start with cash. Cash is 52,000. And then I have accounts receivable. Accounts receivable, 38,000. Supplies are 3,000, and land is 450,000. So those are all of my assets. So notice it puts an underline under it. So on line 6, I'm going to put total assets, and I'd add all 4 of those up, which should be 543,000. Okay, so that's the left-hand side of my accounting equation, right? Assets. All my assets, add them up. Liabilities, I only have accounts payable. Accounts payable, and it is 18,000. And these are all just given. Under equity, I only list common stock and retained earnings. So common stock, that amount was given at 100,000. And then retained earnings. again, here we calculated it in the previous example. But if you have to on the homework, I would go back to the instructions. I would follow the same format. I would start with beginning retained earnings, which are 300,000. I would add in my revenue of 900,000, subtract out my 3 expenses, and then subtract out the dividends. So on your homework, you'll have to go through that whole procedure to calculate your ending retained earnings, or ending retained earnings. So you're really just following the statement of retained earnings, okay? So retained earnings was 425,000. On line 12, I put total stockholders' equity. And I add those two up, so 525,000. And then on my very last line, I put total liabilities plus, or and stockholders' equity. It's not letting me put the space in. I don't know why it does that. Oh, well, it fixed it. So my total liabilities and equity would be my accounts payable of 18,000 plus my equity of 525. So I add liabilities plus equity, 543,000. So the whole point of the balance sheet is to show total assets, 543,000, equal liabilities plus equity, 543,000. So if those don't equal, then your balance sheet is incorrect. Okay. Any questions on that? Okay. So hopefully that'll help you finish up your homework tonight. Don't forget to finish up homework. And let's start talking about the exam. Okay, let's go for that. So as far as your first exam goes, that will be Wednesday in class. So you'll come in here just like you normally would. You'll log in and go to Cengage, and it will open up at 2 o'clock. So once you get in and get ready, you'll be ready to go. I would bring a calculator. If you don't have one, you can use the one on Cengage or like on the computer. And then maybe some scrap paper and pen or pencil in case you need to do, just keep track of things, right? Always encourage that. You won't be able to use notes on this first test and no phones or anything, okay? So it will be a closed book test. It's 25 questions. It's nothing, killer, I promise. It's a mix of multiple choice, and then you'll have some hands-on problems as well, okay? So I'm going to kind of go over, and y'all can ask me questions too as we go to make sure kind of you understand, what to expect. So really what to expect is you'll have multiple choice questions that might be over. It may still be kind of hands-on stuff like calculations, but it'll be multiple choice. It may be some terminology, which we'll go over that. And then the hands-on will be similar to like your homework problems. For time's sake, your hands-on problems aren't that blank sheet, like the one we just did where it just has all the amounts and labels that you have to type all of that fun stuff in. On your test, you'll have drop-down menus on the statements. So that way you don't have to type everything out. So you'll at least be prompted. So instead of it saying income statement and just blank, it'll have a drop-down where you'll choose like revenue, and then you'll type in the revenue. So that way you're not typing as much, and you have it's called a guided exercise. You probably had some of those in your homework. So it'll be like that. It won't be just a blank sheet. So I won't expect you right now to be able to do a statement blank sheet. So things to kind of go over and review. A good way to review is to do that adaptive study plan again, the one we did before class started. You can get to that in Cengage. Just show you real quick. If I'm logged into Cengage and I click on Study Tools, that very top link, Adaptive Study Plans, I can go Chapter 1. Yours would probably be like Resume or Resume Study or whatever it says. And you won't actually be graded on it now, but you can do it just as a preparation. So it has like study activities for you, like little videos and stuff. And then you still have your quiz yourself. So you can go in and quiz yourself again. Because honestly, a lot of the questions you see in this may be similar to exam questions. It's the same program, you know, so it's not a bad idea to go through and take those quizzes again and just have an idea of where you need to study, okay? So that's a good way to study. But let's just talk about it, because there's a lot in chapter 1 that you won't be quizzed over. So let's talk about what you will be quizzed over. Know the basic accounting equation. That's a big one. So what is my basic accounting equation? Very good. Assets equal liabilities plus, or liabilities plus stockholders' equity. So that's going to be a big part of test 1, is knowing that and understanding it. Assets equal liabilities plus stockholders' equity. So I would know the equation. I would know how to calculate the numbers. You know, we did that in the homework and in the examples, where if I give you assets and liabilities, you can calculate the equity amount. So you'll see some questions. I mean, really, honestly, one is just like your homework where they give you the blanks, you know, in the equations like we did together. There may be 1 or 2 that's like a multiple choice word problem where it says assets are this much, equity is this much, what's your liability, okay? So just be prepared to calculate those. That's not too bad. I would also just know what each part is, right? Like definition wise. So like what's the definition, or what is an asset?
Something of value.
Very good. Assets are of value. Okay, so I would know, you know, assets are something of value, something we purchase that are valuable. And what are some common, just while we're on this, we might as well just go in order here. What are some common asset accounts? Cash, land, supplies. I hear another one. Accounts receivable, very good. Equipment, very good. So know, you know, some of your common assets: cash, land, supplies, equipment, accounts receivable. Okay. I wrote cash very weird. My head doesn't look like cash. It looks like, I don't even know how to pronounce that with an L on the end. Cash. Okay, what's a liability? What's the definition? What does it mean?
Anything you owe money towards.
Yeah, it's a debt, right? It's something we owe. So another word for that is a debt, something we owe. So what's the only liability account we've dealt with?
Accounts payable.
Very good, accounts payable. So again, some of the questions may be as simple as, you know, here's 4 accounts, which one's a liability account? And you would choose accounts payable, okay? So just studying those. So really the only one we have is accounts payable. And then what does equity mean to us? That one's a little bit trickier to define, isn't it?
Yeah, it's your common stock.
Common stock, that's one of our accounts, good. What does it mean? Like, what's the definition of stockholders' equity?
It's like the worth, isn't it?
Yeah, that's good. It's the worth of the company. You know, I kind of like to, you know, when we rewrote it, we could say equity equals assets minus liabilities. It's basically the textbook definition is the rights of the company to the owners. You know, the rights, the value. But I like to look at equity, yeah, as like the net worth of the company. The value of the company. So if we took all of our assets and paid off all of our liabilities, it's what's left. So it's the value that the company is actually worth. That money, again, if you look at it this way, when we went, if not when the company dissolves, the stockholders' equity is how much we would pay to all the stockholders. We would take all of our assets, pay off all of our debts, and at the end, whatever money's left would go to the owners. That's what stockholders' equity is. But when we're still operating, it's like the net worth. And as you mentioned, we have common stock as one account. Does common stock increase or decrease equity?
Increase.
Increase, good. What's another equity account? Revenue, good. Does it increase or decrease?
Increase.
Increase, perfect. So what are two types of accounts that decrease equity?
Dividends.
Expenses and dividends, perfect. Expenses decrease equity and dividends decrease equity. Okay. So just as kind of a review when we're talking about statements and stuff, remember you have common stock, and then you can also call these three together would be your retained earnings for the period. Revenues minus expenses minus dividends. So understand the equation, understand what each part means, and be able to identify accounts. Okay. Let's see. I didn't really go in order here. Some of the basic stuff from the beginning of the chapter, I would know before we even got into this. Know the difference between the different ownerships, corporation versus proprietor versus partnership. Again, in this class, we're going to focus on corporate accounting. So, the biggest thing to remember is corporations exist separately legally from their owners. Corporations have owners that are stockholders, they're taxed as a corporation. So just really understand more from the corporate standpoint, since that's what we're going to focus on. So that'll be multiple choice stuff. And let's see. Know the differences between internal and external users of accounting. Okay, we talked briefly about that. It's on the PowerPoint too. But again, in this class, we're focusing more on financial accounting, preparing statements. Those statements are for external users. So again, who do you think would be interested in our financial statements?
Investors.
Investors, good.
Loans or loan of officers.
Right, yeah, like lenders, banks, that sort of thing. Good. Auditors, good, like external auditors. The government for taxes. And of course, managers within our own company are interested in that data too. But financial data, external users, we're really looking at the government, we're looking at investors, lenders, stockholders, okay? And that's financial, that's what we're working towards in this class. Managerial accounting, that's more internal user of information. So when I think of an internal user, what kind of people would be internal users? Managers. Usually not investors so much. With the managerial, you're looking more at like managers and like CEO, CFO, maybe even employees. So yeah, people really that get a paycheck. That's kind of what I think. Internal users, people that get a daily paycheck. Okay. So just know that one's not too bad. And we also talked in chapter 1, and these are all multiple choice things, about, there being a lot of fraud and problems, of course, and so there was a lot of oversight you had, and you don't have to know all of this, but I'll tell you what you need to know. But, we had Sarbanes-Oxley Act, which kind of helped clean all of that up and made a lot of rules. So what you do need to know is that the FASB, so the Financial Accounting Standards Board, FASB, are the ones that develop accounting principles. So they're the ones that are writing accounting principles that corporations must follow. So FASB. And the accounting principles that they're developing are GAAP. Remember that term, GAAP, Generally Accepted Accounting Principles. Generally Accepted Accounting Principles. So know that, GAAP is what corporations follow, and that it's called Generally Accepted Accounting Principles. And again, those are developed by the FASB. You won't have to know all the rest of it. There's a lot, but that's the important stuff. Generally accepted accounting principles follow us through all accounting courses, so they're very important. I would also know some of the principles and stuff. I'm recording this, so you'll be able to watch it later. Yeah. So I don't make you know all of the principles and assumptions, but know the business entity assumption. Okay. So the business entity assumption is the one where we say we need to keep separate financial records from the business and our personal records. That's all it is. Business entity, separate records, personal and business. Business entity assumption, business and personal records should be kept separate. And really that applies more to like a sole proprietor or partnership, but it is a big assumption. So those are really the multiple choice over that section of the book. And then we got into the statement, the equation, seeing where I'm at. I went out of order on my list. So when we get back to the equation, of course, the whole purpose of this equation, assets equal liabilities of equity plus equity, is being able to keep business transactions, record of business transactions. So the test is going to focus a lot on those business transactions. So know what a business transaction is. Be able to identify, is that a transaction or is it not? So a business transaction is anytime we exchange goods or services or money, okay? So if I buy supplies, is that a business transaction? Mm-hmm. Yes, I got supplies for money. I pay my workers. Is that a business transaction? Mm-hmm. Yes. You know, anything like that. I buy land, business transaction. What if I go sign a contract, but no money is exchanged? No, that is not a business transaction. So I could go sign a lease and not put any money down. I'm not doing anything that needs to be recorded in my accounting. When we're recording transactions, there has to be some kind of money or goods exchanged. So in that case, when I pay, if I had to put a down payment on a contract or something, if I was signing a rent lease, that would be a business transaction. Okay, so just be able to identify, you know, is it a transaction or is it not? And then getting into transactions, this gets into more of the hands-on too, but you'll have multiple choice. Similar to the big, you won't have one of the big long ones on your test, you know, where you have like A through J and you're doing all the increases and decreases. But you may have a problem that says, I bought supplies on account. And you need to say what's happening. Like assets are increasing and liabilities are increasing. So be able to take transactions and analyze with the accounting equation, okay? So again, you won't have a big list of ones to do, but you might have a few, you know, that you go through and tell me what's going on. So understand. So that's a big review, really, is just going back through different transactions and being able to say assets are increasing, liabilities are increasing, okay? Know what prepaid expenses are? Prepaid expenses. Does anyone remember what a prepaid expense is? For example? Kind of, well, we pay for it right away.
Is it like supplies?
Yeah, like supplies. Yeah. Yeah. I know, it's easy. It's like, well, yeah. So a prepaid expense is like supplies. It's an expense we pay for up front and then we expense out later. So it's an asset. A prepaid expense is an asset when we purchase it. So when we buy supplies, supplies is an asset. So it's increasing our assets. But we know later down the road, we have to expense out the supplies we've used. So yeah, we call them prepaid expenses. as far as other multiple choice, I would know the order of the statements. So again, you know, we have to prepare them in a specific order. So it's always income statement. There's the income statement. What's the second one?
Balance sheet.
Balance sheet will be
Oh, no,
number
retained
3.
earnings, right?
Retained earnings, yeah. So income statement, retained earnings statement, and our balance sheet. Income statement, then retained earnings statement, and then our balance sheet. Okay. So I would know a little bit about the statements. For example, again, on the hands-on portion, you will have to know how to complete an income statement. So income statement, what are the 2 accounts that show up on an income statement? Account types. What does the income statement report?
Cash.
Cash goes on the balance sheet, actually. Almost, right?
The door lock, you know.
Yeah.
Okay, ask your question again.
Yes.
Ask your question again.
What accounts show up on the income statement? Or what does the income statement do?
Net income, oh, fees earned and expenses.
Yeah, revenues and expenses. Okay, more specifically fees earned. So on your income statement, it's always revenues minus expenses. And that'll be either net income or net loss, right? I'll be net income or net loss. So we start with our income statement first. Revenues minus expenses, or fees earned minus all of our expense accounts. And that's going to equal our net income or loss. Okay. Retained earnings statement. What account types show up on the retained earnings statement? Revenue, kind of, in your net income, right?
Yeah.
Yeah, good.
Expenses.
Mm-hmm.
Dividend.
Dividends. And then just retained earnings, right? So retained earnings statement always starts with like beginning retained earnings. I'm going to put RE for short. Beginning retained earnings. We add in our net income, which we calculated on the income statement. So beginning retained earnings plus net income minus dividends. And that gives us our ending retained earnings. So beginning retained earnings, if there is any, plus net income, which is revenues minus expenses, minus dividends equals our ending retained earnings.
What's the first one? BEG?
Oh yeah, beginning retained
Okay,
earnings.
beginning.
Sorry. Trying to cram it all into my board there, right? Yeah, beginning retained earnings plus net income minus dividends. So those 2 you want to know how to prepare for the exam. Okay. Again, it won't be the blank sheet. You'll have drop down, the guided, but you'll want to know how to calculate those 2. And then what does our balance sheet do? What does it show?
Make sure that your profit or well, everything's balanced.
Right, yeah, it shows we're in balance. It shows that our equation's balanced, right? Assets equal liabilities plus equity. So your balance sheet is going to be all of your assets. And that's going to show that it equals your liabilities plus your equity. Okay, so it's really just the accounting equation. The only difference is when you get to equity, you're only listing common stock and that ending retained earnings. So on your equity section, you only should have common stock and ending retained earnings. Okay. Again, you won't have to do a balance sheet, but it's just good to understand what it's for and what accounts are on it. Any questions on the statements? Okay. So as far as your hands-on stuff, the stuff that'll be more fill in the blank, I've already said some of these, but just to reiterate, you'll need to know how to put in missing amounts in your accounting equation. So if I give you assets and equity, you'll calculate liabilities. Okay, that'll be one hands-on fill in the blank type. You'll have a question that just lists different account types, like cash, accounts payable, common stock, that sort of thing. You'll just need to tell me, is it an asset, a liability, or an equity account? And you'll have a drop down there. So just be able to identify account types. So if I said revenue, you would say it was an equity account, you know, that sort of thing. If I said land, you'd say it's an asset. Okay. A big portion that you'll see both in multiple choice and possibly in some fill in the blank type is, again, just being able, if I say I bought supplies on account, well, what's happening? If I buy supplies on account, is that affecting assets?
Well, assets and liabilities.
Yeah, assets and liabilities, right? We're specifically supplies, but it's assets. Is assets increasing or decreasing?
Increasing.
Increasing, good. What about my liability?
Increasing.
Increasing. Okay, so be able to do that. On those questions, just remember to read them slowly and double check, you know, because they do get confusing a little bit when you're just choosing increasing or decreasing. So just go back over and check your work. You'll have time. And then the last hands-on stuff, again, we'll be doing an income statement and a retained earnings statement. So those are both the two easier statements. Any questions for me? So most of it, again, the problems will be similar to what you see on the homework. They just may be a little shorter or a little bit easier. You know, homework gets a little lengthy, of course. And you'll have the guided. You won't have to type everything in. But yeah, that's my biggest thing. Honestly, it shouldn't take you the full 75 minutes to do the test. So when you get finished, just double check, you know, double check, read back through, because it's really easy to like confuse receivable and payable or, you know, put in the wrong number. So just double check your math and just read back through, especially on the ones where you're analyzing transactions. Because it's just like math, right? We see a lot of careless errors and you'll get frustrated with yourself. You know? My son does that all the time. So, and I did it. I mean, I did it too. I'd be like, how did I make a B on that test? I knew that. And then you get your feedback and you're like, oh, whoops, I added instead of subtracted, or, you know, something silly. So that's a big thing. Again, this first test, it's really just understanding. The biggest thing is understanding the accounting equation and being able to analyze those transactions. You know, review the multiple choice, the terminology type stuff, but I pretty much read you what was going to be on the multiple choice stuff. So, you know, obviously make sure you understand those, but really the accounting equation and those transaction effects, that's what I would probably focus the most on preparing and understanding. I think that's the hardest part of chapter 1, is just analyzing transactions and being able to show that you know what's being affected. But again, that adaptive study plan, you go back through it, it'll be a really good preparation. I mean, there may be questions on there that you see on the test are very similar. So that's a good method of studying. You have access to the PowerPoints on Canvas. You can actually go back through the Chapter 1 PowerPoint. There will be more information on there than you'll be quizzed on the test. But, you know, it'll go back over like internal versus external and things like that. Everything. It covers the whole chapter, of course. Trying to think of any other. You guys have any questions? Anything that is confusing you guys? I'm feeling pretty good about it.
We can go back through the previous homework, right? To
Yes.
kind of refresh ourselves.
Yeah, and I always tell students it's easiest if you're trying to get back into something you've already done, go through Canvas, because Cengage sometimes it only shows you what you haven't done or what's still open. So yeah, just come through Canvas, click on your homework. You should be able to see, even if you've already finished it. Oh, that's a good, don't forget to finish your Chapter 1 homework. It's due tonight. We have about 30 minutes left, so you can stay and work on it if you'd like and get it knocked out of the way. But yeah, I'll be on campus tomorrow afternoon too. I have class until like 12:15, but I'm here 12:15 to like 2:30. Like, what time am I here? I don't know. But you can always email me too if you run into questions before the test. And then on Wednesday, I get in at noon before class. So if something's bugging you and you want to go over it.
Test will be taken in here.
Yes. Yeah. So Wednesday, come in here. You'll log in to Cengage and just take it. Again, calculator, scrap paper, pencil. If you don't have a calculator, you can use a Cengage one. Just no phones. Any questions? First test, it's always like, oh no, right? But it won't. It's not bad. And then